Hey, Stephen, how do I sound? Good? All right. I think, Stephen, we're ready to go? Okay. You guys all ready? Ready to roll? All right. Well, it's a somewhat of a small group here today, but I got some of the finest people out there this morning, getting up early this morning before the, I suspect that everybody else from the show here is waiting breathlessly for the market to open in about 15 minutes, right? But you guys are the warriors. You guys are here doing the right thing, coming out and learning and educating yourself. And thank you all for being with me this afternoon. Morning, excuse me, not afternoon yet. I hope everybody's enjoying the show. I guess we're kind of winding things up right now. But I hope to leave you guys with a lot of good information, and hopefully you guys leave with a bang here. So we're going to talk about winning with options. It was my favorite. I told Kathy this morning. This is my favorite presentation. I do about 7 or 8 different ones, create some new ones here and there, but this is by far my favorite one, called The Art of Selling. I think selling is one of the most underrated activities out there. We have to all understand that in this game of trading or even investing, what's important is to understand that it's a game of survival. We're trying to stay in the game as long as we possibly can. And our goal, our mission, so to speak, is to book profits. And if we're not booking profits, if we have losses, you take those losses off the table and you move on to something else. Those things are going to happen inevitably. There's nobody out there who's a perfect trader. I haven't met him yet, and I think it's some kind of fictitious person out there. But we have to all realize that none of us know the future, and we can't rely on our instincts and say that we know what's going to happen out in the future, and we can take advantage of that, and there's no way we can possibly lose. That's just a fallacy. So when we're in a situation where we have winners or we have, like I said, we have losers, you've got to learn how to sell. And I know a lot of people. In fact, I was talking with if you don't mind, Kathy, I was talking with her this morning, and we talked about. She mentioned we have in the service we have a trade on Google, Alphabet, which reported their earnings last night, and it looks like it's probably going to open up pretty strong today. So we're along these August 12:30 calls. What do we buy those at? About $25, something like that. So they may open up at $35, $40, who knows, something of that nature. I don't know. So Kathy asked me, so what are we going to do with the Google? And I told her, I said, well, you're going to learn a lot about what to do in this presentation. And what the important thing is, you have to empower yourself and say to yourself, you know what? That's a good win. I'm happy with it. I'm going to take it off the table. And not sit there like a deer in the headlights saying to yourself, my gosh, what am I going to do? This is a huge win. I've never done this before. And you've got to react. You've got to move. And I tell everybody in my chat room, I tell everybody in presentations, and you guys remember this, we're in the moving business, not the storage business. Okay? You got to keep moving your feet, moving your money, moving your capital around. That's what it's all about. So a little bit about me. I'm a founder and chief options strategist at explosiveoptions.net. I'm a former portfolio manager. I managed funds for hedge funds. So basically, I manage the managers who manage the money. Our pension fund when I first started in 1996 was about $220 million. It was about $310 million, and the 401k went from about $40 million up to $50 million before I left, about 3.5 years. That was during the dot-com era, 1996 through 1999, where it seemed like you threw anything against the wall, it could make it stick. Everything was going up, remember that? So it wasn't long after that I started out my hedge fund in 2000. I'm a contributor to TheStreet.com, RealMoney.com, Real Money Pro. Some of you may or may not know, I often am called upon by Jim Cramer to help him with the off-the-charts segment of Mad Money. We did it actually last Tuesday. We did a segment for him on, I wrote all the copy for that. We did some biotech stocks, I believe. Illumina, which is an equipment stock, Gilead and Celgene. So those stocks are actually up a little bit from when we talked about it. But I think that those couple of names have some upside going forward. I think Gilead has earnings coming out tomorrow, and Celgene is out on Thursday. So we'll see how that works. But anyway, so Jim's been calling me for over almost 6 years now. And if you don't mind me, indulge me over here a little bit. You guys, anybody ever heard of FANG? Quite a few of you, right? Do you know where it came from? Yeah, I don't take a lot of credit for that, and Jim actually mentions it a lot on the show. But so back in 2013, Jim asked me, said, can you help me out with the show segment? And back at the time, he had a couple of other acronyms that he was playing around with. So I said, well, you know what? Let me put these together. And Facebook, Amazon, Netflix, and Google. So I put it together, and I kind of, it was kind of a cute thing, and said, call it FANG, because it was the first letters of each of those names. And I mentioned to him that, oh yeah, FANG was the name of the dog, and Get Smart, and he just kind of laughed about it. And so he ran with that in February of 2013, and the rest is history. And so that was just a great thing. I don't think you can go a day in the business media without hearing the name FANG, right? I mean, it's just something that he he pounded it over and over and over again, and which is a good thing. I just let it go. I mean, who knows Bob Lang? Nobody. Who knows Jim Cramer? Everybody, right? So I mean, he managed to run with that. It was and we developed probably the best acronym ever in investment management. So that was a lot of fun, and so I get I get a kick out of that when we talk about it. I hear about it all the time. And a lot of people are trying to evolve it and devolve it and change it, and FANG or FANG Ma, or doing all these different things. You can't change the original, right? It's like trying to change the formula for Coke, right? Remember they tried to do that some years ago? That went down the tube. So I also, other things that I do, help co-manage the Trifecta stocks with my good friend Christopher Sace. Co-manage a daily chat room filled with traders, and analysis and flow, actionable ideas. I'm there every single day, and we have a good 120 something people. Kathy even asked me about that, and we talked a little bit about it. So if you're into trading and investing and learning about things on a regular basis, I'd encourage you to come by the chat room and see what we're doing. And then I'm really excited. About a week and a half ago, I've finally got published. I wrote a book about options trading and a lot of the things that I've learned over the years about options trading and technical analysis. And I put it all together in this book, and I finished it about a couple of years ago, and it's been painstakingly hard to get the book published, but we finally got it out there. It's on Amazon. It's actually going to be a full on launch either tomorrow or the next day. But it's actually up on Amazon right now, and you can get it for it's an enormous price of 99 cents, right? It'll be more money afterwards, but it's just kind of an introductory thing right now. But it was a chance for you guys to get in there and try it. I'm really excited about it. It's a great book. It's a lot of fun, and you'll learn a ton about options and about trading and psychology and everything. So let's get into the presentation here. This is a passion that I share with my good friend Mark Chaikin. I love to teach. I facilitate thinking. I engage minds. I listen to questions, encourage risk, all this stuff. Cultivate dreams. I learn every single day, and I try to teach. So important to share what you know with other people. I feel that, you know, we come in this life believing, knowing that we have a gift. Some of us, you know, have other certain gifts. Others, you know, choose to share it. Others choose not to share it. I feel the former, and I feel that it's most necessary for me to share as much as I know about investing and trading with everybody out there. Otherwise, it's not a life fulfilled for me. So that's what I try to do. So here's some of the things that we were going to cover today. What is the long lost art of selling? Why do we sell? We do it so we can stay in the game, right? And we also talk about doing things because you want to do them, not because somebody else thinks you should do it a certain way or suggests you to do it your way. Again, something else I was talking with Kathy today. You know, she asked me, well, what are we going to do with our Google today? Well, I'm going to do some selling today. I don't know about you. I'm going to sell some of my calls. I'm not going to look at gift horse in the mouth and say, look, I mean, I'm just going to ride this out into the sunset. That's just foolish, right? There's always another trade out there, right? If I'm selling Google today, I might be looking for a place to put that money. Maybe it's in Facebook or Amazon later in the week, or Twitter later in the week, or Celgene, or something like that. I may be looking at those two other ideas. The key to it is being flexible and doing your thing, what you think is right. We'll talk about a little bit about position sizing, some trades we've done this year, and maybe possibly some new trade ideas. I wrote a few things down. I have it in my backpack over here. I'll share some names that I'm looking at this week, some testimonials, and then you know, there's a chance I'll talk about coaching and mentoring, which is one of the reasons why I'm here. Twofold is to present to you guys this morning, and then also I have a client who I'm going to be meeting with later today and tomorrow, who I'll be doing some coaching with and mentoring, showing him the more finer points, some of the things that are contained in the book, but it's far different when you're with somebody physically and you can see them and they can help you out. So let me ask you this question: Is this true? Tom Basso says that I think investment psychology is by far the more important element, followed by risk control, with the least important consideration being the question of where you buy and sell. Who thinks that's true? Some of you do. I'd say it's partially true. And I'm sorry for the. It looks kind of fuzzy over here, but I think what's more important, you have to balance that. You have to understand when it is right to buy, when it is right, the right time to sell. It's all about psychology. It's all about the mentality. It's all about how you feel about things as well too. So there is this element of this gray area, I call it, of emotions and investor psychology that it's hard to track. It's hard to put a number to it, but it's something that you've got to have a decent feel for, right? Does it feel right to sell something at 40%? Well, if it doesn't feel right, then you risk losing that profit or possibly making a little bit more. Is that a risk that you want to take? For a lot of people, they don't know what that risk is. They don't know what their risk tolerance levels are. All I can tell you is this, is that if you have a 40% gain and it goes to 0 and you start crying, you have a pretty low risk tolerance. And that's a good thing. That could be a good thing. And you lose some money in one aspect like that. Believe me, that won't ever happen again. It shouldn't ever happen again. So let's talk about the art of selling. You have but one job: booking profits. Period. End of story. That's your job. If you're a trader, if you're an investor, this is what you're supposed to do. Sometimes we don't have profits, right? And we end up having to cut bait, right? And why do we have to cut bait? So we can get something like this, right? Go back to that little guy. We want to nab that big fish, right? So why are we in the game? We are in the game once again to book profits. Yet many are unable to do this. I run across people all day long. Bob, I've got a 50% gain in something. I don't know what to do. We'll talk about that in a few minutes about how I managed to rectify that problem, so to speak. I know some people are watching me on live stream right now. Everybody's referring to the baseball bat right now. Some people can't take a profit because they feel like they're suffering from one of the 4 fears of trading, right? The fear of what? FOMO, fear of missing out. Everybody familiar with that one? My God, what if I sell it and it goes up without me? Oh my God, what am I going to do? I'm going to miss out on all those profits that everybody else around me is making money on. So why are so many afraid to sell? I think oftentimes it's to hide from a mistake, right? You make a mistake in your trading and you say, I can't admit that I had a problem. And honestly, I don't think a mistake is a trade that goes awry, goes against you. You want to hear a trade that went against me last week? I think Kathy's in the service, she probably knows. Skechers? Boy, that was horrible, right? Hi, Ricky. That was a horrible one, right? I mean, that was one that just knocked us right in the head. And you know, what am I going to do about that? It was a mistake if I oversized the trade, right? So I mean, for me, if my trade size was say $1,000, I bought like maybe 7 or 8 contracts at I don't know, maybe $1.30 or something like that, and it went up to like $1.50, and then all of a sudden it went to 0. If that was my risk tolerance, $1,000, it wasn't a mistake. It was just something that happened to blow up in my face. I'm going to move on and find another trade. But if you oversize a position, then that's a mistake, because if you're not in tune with your risk tolerance levels, then you're going to make you're going to have some grave errors. You might get lucky and hit a big one. I've had some people who do that and they think that they're the greatest thing ever, and then all of a sudden they come in really large with another trade, and they get blown out of the water. They get blasted. Why so many are so afraid to sell? Because the profits aren't big enough. You know, I mean, if you get into a contract at like $7 and it goes to 8 or 9, and it's not enough for you, you stay with that trade. Then all of a sudden you wake up in the next morning, it's down to 4. Oh my God, what the hell happened? You know, I didn't take any profits along the way. The name of the game is to book profits. Take them as often as you possibly can. Doesn't matter how big or small. Listen, I'll pat you on the back if you make $1 or even make $1,000. It doesn't matter. It's tough what we do. Not an easy game. Some people believe that this is their lottery ticket. You know, I've had a lot of people out there who said, this is my gold at the end of the rainbow. This is where I'm going to make all of my money. I'm going to make up for, not only make up for all those losses, but I'm going to retire and I'm going to make all this money. And they throw all it through. They not only oversize it, but they put they buy too much on a low probability, high risk bet, and they end up staying with it. I'm going to stay with it all the way to the end. I don't care if it goes to 0. I'll buy it at 20 cents. And I'll watch it go down to 19, 18, 16, 15, 13, possibly double down at 10, goes down to 9 and 7, 5 cents. That's it. I'm going to add a little bit more at a nickel because I know it's going to go up. It's going to go to $1. And then they watch it go to 0. Ever been there? I've seen a lot of people do that. And that's just the wrong approach. Maybe we don't want to be considered wrong. You know, anybody have a big ego? I've seen a lot of people who get crushed by their big egos. I lost mine a long time ago. We don't want to be considered wrong. Who wants to admit they're wrong? They did something. They made a bad trade. Not me, right? Actually, I do. It's very refreshing to be able to say, I made a mistake on a particular trade, or else it just went against me. Oh well, I'm moving on. Let me find the next trade. Maybe if you say to yourself, there's plenty of time left. What are we in, July right now? What if you bought a trade that expires in November or December? Plenty of time, right? Even if it goes against you. I'll wait until September or October to really make up my mind to sell that trade. And if it still doesn't move in my favor, well, so what? I mean, at least I took a shot at it and I gave it a lot of time. Bad move. And then finally, maybe you're just unaware of other strategies you can use to help move your money into another spot. Anybody know where this button is on their keyboard? It's the J key in between the H and K. The sell button. Somebody tells me, Bob, I don't know how to sell, I don't know what to do, I don't know where to put my money, I remind them, I say, look for that sell button. It's on your keyboard, you can find it. And if this is the easiest thing to do, to find out. And I think one of the reasons I often get inquiries as to, hey Bob, I have a profit on something, I don't know what to do, what do you suggest? I don't think anybody really wants the responsibility or the accountability to actually hit that, to say, I can sell, I can do it. It's the most liberating experience I've ever had, to be able to sell and hit that sell button and say, I'm done. Whether it's a loss or whether it's a gain, it doesn't really matter. I'm telling you something, you do that you do that for yourself, you will feel so good for the next 5 or 10 minutes, and then you focus in on the next trade and you keep moving on. And again, as I said, it's refreshing. We all, though, need to learn how to sell, even taking a small loss or a small win off the board. But if we're not ready to do it, we can lose all of our profits. We can lose even those hard-earned gains that we had that maybe turned into a loss, and you find yourself really in the hole. But selling allows us to hit that reset button and get started all over again. Here's just a couple of testimonials from some people. Jason and Julia came in and they said, one of them paid for a whole yearly subscription. It was really nice. Glad to be back. And anybody relate to this guy? What happens when you have a profit and it slips away from you? This guy probably about ready to hit his head on the keyboard. He's probably going to hit his head on the. What I would have done, I would probably have taken that stapler and whacked myself in the head a few times. Here's the infamous baseball bat. Back in the day, I used to talk with people about selling. And if somebody came to me and said, "Hey Bob, I got a 50% gain in XYZ options. What do you think I should do?" And I would tell them, I'd say, "Look, you know what? If you don't know what to do with a 50% gain, let's go have a talk with you, me, and my baseball bat, and my bat's going to win every single time." And it's more of like it's facetious, but of course the meaning is there that if you really don't know what to do, you need to be hit upside the head, because you need to understand that a 50% gain is nothing to sneeze at. It's nothing to be ashamed of. And if you can't take a gain off the table, whether it's 50% or 40%, whatever you're happy with, then if you can't take those profits, then I'm sorry, you're not going to. This is just not for you. That's not what people do who are successful in this business. They have to take profits. How about this guy? Anybody relate to this guy? If you book your gains, I promise it won't hurt. This is something that won't hurt you. And again, selling is the most liberating experience I've ever had. But so many people struggle about it because of this thing that we talked about earlier, FOMO, fear of missing out. According to that Urban Dictionary, it is the state of mental strain caused by the fear of missing out, right? Compulsive concern that one might miss an opportunity or satisfying event. So that FOMO, I like this guy's great. Ever sell a stock or option and watch it go higher without you? Yep. Do you kick yourself for getting off the train? Anybody? Oh, why did I sell it? Why did I sell it? Do you ever chase that trade again? Anybody ever chase it? Yeah. Big mistake, right? Your mind is completely out of whack. I would tell you, book those gains. Nobody ever went broke taking a profit. You can book those gains. You can come back 10 minutes later and put on another trade. But the feeling, the euphoria that you get from taking that profit off the table is like none other. Establish those rules. Live by them. And as Bob Jones says, no one will care as much about your money as you will yourself. So how about losses? We all have losses, right? Anybody a perfect trader out there? Good. If you raise your hand, I'm going to throw you out of here. Okay, I'm just kidding. Anybody hang on to their losers too long? I do. I've been in the business for a long time. I do. Are you always in a hope and pray mode? It's like, you know, it's like you're at the track. You're just come on. You're watching your horse coming around. He's in fourth place, and all of a sudden he comes into third and a second. And you think he's going to make it down the stretch into first place. You're hoping and praying that comes true for you. It's crippling to your portfolio and to your mind. We all have losses. It's just part of the game. I hate to use a gambling analogy, but I will. You go to that blackjack table. You know you're going to have wins. You know you're going to have losses. Obviously, you know the odds are against you when you step into the ring in the casino. But if you come in with the understanding that the more you trade, the better chances you have you're going to book some losses. The better your understanding, and the fact that you won't get offended by a stock that moves against you. Stocks are stocks. They're not people. There's nothing personal about it. You know, I mean, if you do you think that? Well, I had some Skechers calls last week, and the stock got drilled on Friday. Do you think I took it personally? Well, I mean, I sort of did, if you ask me. But I mean, I was just joking with my dad because I live down in Huntington Beach, and I took a walk on Sunday morning down to the beach, and I came back and I happened to pass by the Skechers store, and I kind of went like that, you know, a little. I gave them. I wasn't very happy with the store, but they were closed, so nobody saw me. So, no, I'm in all seriousness, you know, you can't take it personally. This is nothing personal. What you have to do is you have to go out and just keep pushing, keep executing, keep finding new trades and new ideas. And if something works against you, just so be it. Just hopefully you didn't size it wrong. So what separates, I think, the individuals from eventual winners from the losers is how you handle those losses. Are you able to? Are you psychologically messed up when it comes to losers? Can you say uncle on a trade? Can you say to yourself, you know, look, I got in there at $3 or $3.50 and it's down to $2 or $1.75. You know, look, I'm done. I'm done with that one. I'm going to move on. Maybe I picked the wrong strike. Maybe I picked the wrong month. Maybe I picked the wrong stock. I don't know. Whatever the case may be, I'm wrong. You know, I'm just going to move on and I'm going to cut bait. I'm going to move on to the next trade. You know, more often than not, I have found with myself, if I've cut a trade that's not working well for me, that next trade is probably a huge winner. But if I sit there with that loser, keep looking at it over and over and over again, I don't have that capital to put to a new trade, do I? Right? I mean, if I'm just sitting there watching that loser over and over again. That reminds me another thing about having losers in your portfolio. I don't like to see them. In fact, I've even paid the broker to get it off my screen. You know, I mean, something that is bid zero, and let's say I'm in a trade. If I did this with the Skechers last week. I was in a trade that expires in August. There's no way in hell this thing is going to get there. And I don't want to wake up every single morning and, you know, ready to go, ready to fraction, and I look at my screen and I see that Skechers, and all of a sudden I'm depressed, I'm sad, you know? And I'm thinking about that loser instead of getting a nice, you know, jolt from my coffee and getting up and saying, okay, I'm ready to go, ready to charge, I'm ready to make some money today. I have to stare at that loser. Are you kidding me? So I mean, I'll call the broker up and I'll say, I'll pay the broker to get it off my screen. Take it off my screen. I'll pay you for it, and so I don't have to look at it anymore. One more thing about a couple more things about losses. How are you willing to accept it, and are you willing to move on? So notice the last two slides. I say I have winner, and I have hooray. Talking about a little cartoons here, and you probably say to yourself, well, Bob, how can you get excited about losers? It's just because I'm not happy about it. I wish I didn't ever lose, you know. But I'm willing to embrace the fact that those things are going to happen to me. So what's a good rule of thumb? Well, if you're trading options or if you're trading stocks, conservatively, maybe, you know, cut bait on 30% loss. Maybe if you're a little more aggressive like me, 50%. And, you know, of course, some things can happen that'll work against you. Stocks, I come up with the 8%. This is a good rule of thumb on stocks. If you're down 8%, you only need to make 8.7% on the next trade to get back to even. This is a rule that was taught by William O'Neill, who started Investors Business Daily. And here's a couple of other, I'm going to slide right through because we only got a few more minutes left here. Position sizing, we talked about position sizing a little bit earlier. I want to expand upon that right now. It's critical to your trading success. What is position sizing? It's being able to say to yourself, okay, I am going to be responsible, I'm going to be in control, I'm not going to let one trade ruin me or dictate the movement of my portfolio, okay? So, you know, Google, for instance, right? I mean, we bought some of these, you know, maybe some of my client accounts that are, you know, $50,000, $80,000, $100,000. I didn't need to buy more than one contract of that at 25 bucks, right? I mean, 2.5%. If it didn't work out for me, I wasn't going to be devastated, right? But I didn't need to buy 10. I could buy one. And if it's going to work out for me, fantastic. I'm not in it to make a killing on one particular trade. If you are, then you're going to be taken out on a stretcher and you're going to be on the rails pretty soon, because you may get lucky a couple of different times, but I promise you, you cannot win and sustain yourself for a long period of time just by being lucky. Don't let one trade kill your portfolio, because that greed is going to wipe you out. Here's a trade that we did about a year or so ago, Virgin Atlantic, right? We had profits, we take them. Now this is obviously a situation where we saw some good flow in this thing. Virgin Atlantic ended up being bought by Alaska Air, and we had a really huge gain on this thing right afterwards, and we're taking the profits off the table. Obviously, you know, there was a deal there, but there was no surety that the deal was going to get done. But these as you can see here from from the chat room, we saw these calls that we were buying the prior day at about 35. The $35 ones were up to about they were up about 400%. Really good winner. So we got, you know, this is just some feedback from the chat room over here. And then there was another one. We got into DreamWorks. I've owned DreamWorks since the IPO of the stock. It was a horrible stock for the longest time, and finally got out and made some good money on this one when they got sold. So this is from the chat room that day. We talked about I was, as my name, Aztecs99, I was adding the DWA May 31 calls at 220 to 260. We added a few more, and then at the end of and you can see the time, and at the end of the day, they said if there was this deal done with Comcast, he was going to leave, and then all of a sudden you can see what happened to the stock. It shot up to about 40 bucks from about 30, 32. And some people came in and talked about all the money that they, all the stuff they made. The calls were up 300% or more overnight on those. But you know what? That was it. We were done. Time to sell. Time to get it off the table. So we happily sold those. We didn't wait for anybody to tell us when to sell these gains. They were robust gains, and those things that just happen all the time. I know Ricky in the back room over there is in our chat room regularly during the day. Finally got him to come into the room about a year or so ago, and he's convinced. I think things are great. I mean, you know, and you know what, we're constantly rotating, moving money in, moving money out, putting ideas out there. The idea flow has been really, really strong. So again, here's a note on how to take a loss. Size correctly. Do not add to a losing trade. And being able to walk away from it. There's nothing wrong with walking away from a loss, because again, once you put that trade down, put that loser away, you'll find the next couple of trades are probably going to be winners, and you'll put those losses in a rearview mirror really, really fast. So I'll tell you, success, I love this quote, is not about how much money you make. It's about the difference you make in people's lives. And I try to always make a huge difference in people's lives every single day. I go to bed at night, say to myself, you know, did I do a good job? Did I help some people learn a little bit? And if the answer is yes, then I feel very satisfied. So I got a deal for you guys if you want to take advantage of it for the webinar attendees. I'll discount the service. You got the cards that I sent. If you didn't get a card from me, come on up after the presentation up, but I'll give you one of the cards with my business card as well too. I'll send you some ebooks that I had. You've got the link for Amazon to get the new book that I just have out there. Here's how it works. You sign up, instructions on what to do next, receive email alerts, blog articles, chart of the week. Keep hitting the cord here. Weekly webinar invites. I do those every single week. Write blog articles every week. Chart of the week I do usually on Wednesdays. It's a lot of information, a lot of stuff you can learn from. The EO service, I take about 1 to 2% of risk. Return on risk on 2018 is well over 100%. We're up a little over 22% year to date in 2018. The S&P is up about 5, so we're crushing the indices. And again, if you can't follow the markets every single moment, this is probably the service for you. This is one for you. You get the blogs, the webinars, chart of the week, private Twitter feed, and email. Results matter. In 2017, we're up a good 31%. And so again, so we just celebrated our 7-year anniversary in May. And since inception, the service is up well over 200%. So here's the link. If you go to explosiveoptions.net, I'll show you the website in just a second. The chat room subscription is $119 a month. There's a lot of them out there that are selling for $350 to $400 a month, so we're pretty inexpensive. I didn't start the chat room to try and get rich off of people. I wanted to create a good community, a good place for people to come and learn, and not be afraid to ask questions. No question is a bad question. If you don't ask one, then then you're fearing something, and there's nothing to fear in our room. Ricky will tell you, right? Nothing to fear, right? Nothing to fear. So use the card to sign up that I gave you. Here's some just recent results we had. Google calls we were in, and then some spider calls. Just maybe one of these contracts would have probably paid for the service for you. So, and then here's the link for the book. And then finally, last couple of things here. I want to thank you for attending, and as a reminder, become addicted to constant, never-ending self-improvement. That's what you guys have done today. And any questions on anything? And I have the slides available if you like these. You can email me with the email address that's on the business card that I gave you. Anything I can cover for you? Oh, I told you that I had some ideas that I wanted. Anybody? Any questions? Yes, Ricky.
You put on a lot of full put spreads. What is your indication when to enter them?
When to enter those?
Yeah.
It's just, if I'm looking at the chart, I'm looking at the technicals. So do you mean for the spread trader or for in the room when we put some? Either. Well, the spread trader is a little bit different of an animal. So our spread trader product that we have is we look for high probability, low risk trades. But for the ones that I do, like in the chat room, like the risk one to make ones, or some of those are maybe lower, I'm looking for directional movements, right? And I'm looking at the charts, I'm looking at the technicals, and seeing if there's something there that's giving me an indication that that stock's going to go up, right? Or down, whatever the case may be. And if it's going up, then so for instance, and then I'm weighing the risk to reward on that particular trade versus a different one, right? So if you're selling puts or selling put spreads, right? That's bullish, right? Everybody agree? Okay. Buying calls is also bullish, right? So there's our challenge, right? Am I going to sell puts or sell put spreads, or am I going to buy calls? Well, let's use Amazon as an example. Everybody knows Amazon. It's a very expensive stock. It's $1,830 maybe. On a dollar basis, the options are expensive, right? Because it's an expensive stock. But on a real basis, it's really not that expensive. When you think about it and you say to yourself, well, $30 on $35 on an $1,800 stock, that's a lot of money, right? One option is going to cost me, on $35, it's going to cost me $3,500, right? but it's less than 2% of the stock, of the price of the stock, isn't it? 35 divided by 1,800 is less than 2%. Well, I mean, you look across the landscape, even on the technology stocks, Microsoft, Intel, which are, Microsoft's a $100 stock, Intel's a $50 stock. You look across, you'll find that a lot of the at-the-money options there are about 2% of the price of the stock. Booking.com, which used to be Priceline, is $2,000 a share, right? And I hear a lot of complaints, oh, I can't buy an option that's $40, but that's only 2% of the price of the stock. Well, how about a $200 stock that's a $4 option? Same thing, 2% price of the stock. So on a relative basis, there's no difference. It's just on a dollar basis, you think that, oh my God, that's more capital than I have, than I should be putting up. Well, and then you start saying to yourself, I'm going to take more risk. I'm going to go even further out of the money, so I don't have to pay $40. I'm going to pay $20. But you're reaching for something that's not really there. So to answer your question, I'm looking for a better risk reward for myself. So instead of paying $28 or $30 for an Amazon call that the stock has to go bananas for me to really make good money, I might do what's called a risk one to make one. So let's say if Amazon is trading at 1840, right? I might sell an 1845 put and then turn around and buy an 1835 put as protection. So it's a 10-point spread. I might get $4.50 for that spread. Well, so what's my risk there? My risk is another $5.50 if it blasts through 1835 if I'm wrong, but that's all I can lose. So let's say the stock goes down $100. I can only lose 10 total, another $5.50 plus the $4.50 I collected before. What if the stock goes up and takes off? Well, I'm going to keep that $4.50 that I collected, and I can either buy that back really, really cheap or just let it expire. So you're saying to yourself, well, Bob, you lose that on the let up side if it keeps going up. That's correct. But I kept my risk in check as well, too. Does that make sense? Yes, sir. You have a question? No. Anybody else? Yes, sir. FOMO. I don't see why not. Listen, again, we've talked about selling. The goal here for us is to book profits, okay? Period. That's all we're supposed to do. So, don't listen to if anybody says, oh, write it out. I mean, no, those things are that's bad advice. I don't think, yeah, you want to write it out? Okay, well, I can sell it. I can go up to a higher strike. I can roll it up, and I can still participate. I did that. We did that last week with CSX, right? CSX had good earnings. Stock took off. We had some at-the-money calls. I rolled it up to a higher strike. We booked our profits. We took it in, and we're still participating in the trade, and it's still going up. But we're not sitting there, making, with a ton of money at risk any longer. We've already taken some money off the table, and we're moving on. Yes, sir.
Have you used box spreads on the retail level?
Have you used what?
Box spreads on the retail level.
Bot spreads? No. What is that? What are bot spreads?
Well, that would be, what's that? Long call, short call, long call, short call, calculated between strike price.
Oh, you mean vertical spreads? Verticals, right? So yeah. Oh, sure, absolutely. I think verticals are a great way to. Right. Whatever. Yeah. So I mean, do you mean buying them or selling them? Yeah, buying them. Yeah. I mean, sure, absolutely. If you're, directional player, those are a great way to get involved into a play with a little bit less risk. You lose out on some upside if it goes through the short strike, but you basically defined your risk. There's nothing wrong with that. No, I think it's a good way to go. Absolutely.
Is there a cost to
Is there what?
that? Cost,
No, not really.
multi-day.
Yeah. All right, so I think we're running up here. So anyway, so I'm looking at a couple of tech names this week. So keep your eye out on. I don't know if I should say this. You're going to write these things down. I think NTAP, they got upgraded today. Alibaba and AMD and Intel are probably on my list for this week. So keep an eye on those. And if they don't do well, I don't want any nasty emails. Okay. Any other questions? I think that's it. Thank you everybody for joining in with me, and if you're heading on back home, have a safe trip home. And I appreciate you spending a little time with me. I hope you guys learn. Thank you.